Welcome to Alpha Wolf's Den. It's here that we seek enlightenment. Alpha Wolf Trading recognizes that the most successful companies in the world at one point had no earnings. There's a lot more to a company than just its earnings report. That's why here at Alpha Wolf's Den, we interview executive teams. We want to get to know management. We want to understand the vision, the mission, the strategic drivers, the plan. We want to separate fact from fluff. This is not a paid for promotion interview. This is solely wanting to know the company's vision, mission, their critical success factors, their strengths, their weaknesses, their opportunities, and the threats. We want to know the long-term objective and the tactical initiatives that leadership plans to implement to achieve success. We want to know about the company's debt, the cap structure, what it's going to take for them to become self-sustaining and stop burning through cash. We want to know management's previous failures, challenges, hurdles, how they overcame them, or what they learned that they can apply in their current role. We're trying to identify the risk and the reward. And oftentimes, it's strong leadership that makes the difference between success and failure. Here at Alpha Wolf Trading, we are looking for the hidden gems. And I hope you enjoy this interview because this is one of those companies that I think could be a hidden gem. Please understand that this is for educational and entertainment purposes only. This is not financial advice, and I am not a financial advisor. Any investment that you decide to make in any security should be based upon your own due diligence and opinion. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. And this is a great one. I actually started following this one probably about, I don't know, I want to say almost a year ago. Probably is the first time I met you, right?
Yeah.
TAAL is the company, and Chris, I don't know how to say your last name, man. So you're gonna have to help me out. Huh?
Naprawa.
There we go.
All right. All right.
Chris, thanks for coming in. Why don't you give me a little background on yourself real quick, and then we'll hop right into what TAAL does.
Sure. My name is Chris Naprawa. I'm the president of TAAL. This is the fourth time I've been president of one of these growth kind of companies, 3 public, 1 private. I've had the great fortune of being involved in developing industries right at the beginning of the internet and cannabis and wireless, and now in blockchain. And TAAL is a well-capitalized, profitable company that is focused on building the tools and services that make it easier for developers and for enterprise to adopt blockchain technology. We live in a world right now, and we just talked about it, where everyone's focused on crypto tokens and the price of tokens, but they're not thinking about the underlying technology of the blockchain, which is as important of a development as the internet was in the mid-90s. We are going to use it for absolutely everything we do. And just like the internet, and we're using it right now for this call, most people don't know how it works and they don't care. But a lot of companies created a lot of wealth to get to this point in time, and the same thing's happening right now in blockchain. We're going to use it for everything we do, all day long. It's absolutely crucial for things like Metaverse that we talk about, and a lot of developing industries that are brand new right now, but they're going to be very, very common in a couple of years' time.
Okay, so it's interesting that you brought up the Metaverse, right? Because Metaverse, like 3 or 4 months ago, wasn't even wasn't even on anybody's radar. Now it's not only is it on everybody's radar, Facebook changed their name to Meta,
Yeah,
right?
absolutely.
Now I can see, and I've always thought that, I don't know about VR, virtual reality, where you got to have this big old goggle on your head. I can see AR in a big way being in our everyday lives, right? Walking down the street and seeing different ads coming out of stores that are personalized to me. I can see all kinds of use cases for NFTs. And I mean, I don't think these things are going away. I don't think they're fads, right? And to get everything on the blockchain, like you're talking about, the transactions, all of that stuff, you have to have a lot of capacity, a lot of ability to be able to do things very quickly, right? I mean,
Mm-hmm.
and
It's got to be fast, it's got to be cheap, and it's got to scale. And the blockchain that we use is called Bitcoin SV, and it is the most scalable in the world. And even as of today and this morning, we're doing more transactions per day than all of the rest combined. And those are just plain old facts. And it's because when you think about Metaverse and you think about all these things, in a transactional economy, it's peer to peer. And what is the blockchain? The blockchain is a tool of consensus. It allows two people or two things that don't know each other to trust each other. And that's why this proof of work is still so important, and that you can have these trustless transactions. And last time we talked about video games, and people buying things in video games, which are really just kind of like NFTs if you think about it. And why not be able to buy this stuff and take it from game to game, not just living in your first person shooter game or your driving game or your fantasy game, but all those things are in your crypto wallet. And then you take it to another level. It's like, why isn't everything in my crypto wallet? My identity, all my banking information, my finances, my medical records, all of that stuff that makes you, that all ends up in your wallet, and it's all permission based and allows you to use it as you see fit, without a third party intervening, without a bank, without a government, without a credit card company. That's the real promise of blockchain.
Right. And that's a big, I mean, it makes so much sense to me, because from so many different angles. Efficiency, right? I mean, if you could have one piece of identity, I guess, that has your social security, your voter registration, all of that stuff, all in one area, instead of having to have, all these different pieces, right? It makes so much sense to me. Efficiency. I mean, it makes, voter fraud, that would be pretty tough to do.
Absolutely.
Right?
And that technology exists today. It's just, it's there. It exists today. It's just about further development and adoption. Think about something as simple as email. Well, it took 20 years for email to catch on, really, from when it was invented and, first users were using it. I can remember the first time somebody suggested I get an email account. I thought, what on earth do I need that for? Imagine not having that now. And it's the same thing when you think about your own identity. And, another example of what's in your wallet, like all your preferences, things that you like on the internet. Why is it that 4 companies own all of our identities and make all this money from it, and we get nothing for it? Think of any other industry in the world, your bank, your airline, your drugstore, everything, your credit card, they all reward you for your loyalty, and you get a piece of the action. My airline and my hotels and all that sort of stuff, I get serious rewards for all that stuff. But on social media, we just give it away for free and don't get anything in return. But if you're managing your identity, in your wallet, it's like, yeah, you can go promote results to me or show me ads, but I want part of that revenue.
Right. So it's my understanding that Google is getting rid of the cookie, right?
Okay.
So if Google's getting rid of the cookie,
Mhm.
all this data that Google has and all these websites that rely upon those cookies, there's going to be like a big data gap, right? Somewhere happening here soon. And I actually think that this privacy initiative that some states are taking, like California, right? I would think that would be good for a company like TAAL. Yes.
So when we're making these tools and services for this transactional economy, anything that creates transactions is good. And you got to expand what you think about a transaction. A transaction is not merely financial, but you and I trading things, or I listen to a song and I pay a fraction of a penny every time I listen to it on a metered basis. Videos, like all these types of assets, all the tokenization of real world things. Um, that's what Bitcoin was invented for. Store of value, digital gold. Those words don't appear in the white paper from 2008. It's a very short document. A lot of people have their lives invested in this stuff. They still don't really understand what it's supposed to do. And it's a peer-to-peer electronic cash system, cash being a medium of trust. So, all those things that we can do, far beyond finance, they all create trades. They all create transactions. You've got a stock ticker in the background of your screen there. Like, we live in a world where it's still T+2 to settle a trade today, like in 2022. Doesn't make any sense. Like, why isn't that settlement 1 second? It's because there's a whole bunch of third parties getting paid.
Right.
And I'm not going to give you your stock until I make sure I got my money, and my money is with my custodian, and that goes through my transfer agent, and it goes through this and goes through that, and we make sure everyone's getting paid along the way. But if it was truly peer to peer, those trades would settle instantly.
Which is so there's a lot of vested parties that really probably do not want this to occur, right?
Oh, absolutely. Well, it's not wanting it to occur and trying to prevent it from occurring. It's there's a lot of money at stake here, and there's been a lot of suppression of what Bitcoin was supposed to do. We could make the whole conversation just about that. And BTC does not resemble the invention of Bitcoin. It doesn't look like it, doesn't act like it. Has very, very few of the original attributes left. Those were all stripped out, and we could go down the rabbit hole of who did all that and why. But it's exactly what you're talking about, because the stakes are very, very high. If there was one protocol where we could all transact in the world on anything, and truly in a peer-to-peer trustless way, without all these intermediaries, without MasterCard and Visa and AXA Insurance and the bank, that's very threatening to a lot of people.
So I think what I have found most interesting about the whole crypto world, and I'll be honest, I missed the whole Bitcoin run. I went and took a little course in Bitcoin when it was at 3,000, and I sat there for the hour and 15 minutes, and I thought, I mean, we went through this opening of a wallet and a 24-word thing, and I'm like, yeah, I buy a stock, I hit a button. I sell a stock, I hit a button. I'm done. This is going to be the biggest fad ever. That was the way I walked out of there.
Yeah.
Of course, here we are today, and obviously I was an idiot. But what I've noticed is I've tried to educate myself more, and I bring things up. For example, TAAL, and if you say anything that the Bitcoin guys or the Ethereum guys, it's like you're insulting their family members. If you happen to
religious.
It's religious. Unbelievable to me. It's like fierce almost, right?
Yeah. It is. And it's no different than the beginning of the internet, when there was a protocol war. And wireless, we went through the exact same thing. It was a religious experience, whether you're TDMA, GSM, CDMA. But in the end, we only need one protocol, and utility, scalability, convenience, and cost really matter. And you're right, like, everyone loves Ethereum and believes in smart contracts and tokenization, all that stuff. We believe in that too. But if you have an invention, and after a couple of years of use, you have to tear it down and rebuild it from scratch again, that there's a really simple way of putting that. It means this doesn't work. It doesn't work. We have to start over again.
Right.
We'll call it the same thing, but we're going to start over again. You don't have to be very technical to understand that. So, the reality is that Bitcoin SV can do everything that Ethereum can do, just a lot faster and a lot cheaper and with a lot more scale. And, as the cat's kind of out of the bag, it's getting harder and harder for anyone to disagree with that.
So tell me, or break it down to the viewers, exactly what TAAL is. I mean, so what is it based upon? Are you doing transactions with Bitcoin? Are you doing transactions with Ethereum? How does it work?
So at the core of our business, we're a mining company. We have to mine blocks to do what we do. But on top of that are tools and services that help these kind of companies use the blockchain, capture the utility of it. So our customers include video game companies, music companies, healthcare companies, supply chain logistics. They're all capturing the value of the blockchain. So the more tools and services that we have that make it captive to us, we get those transaction fees. So, in the white paper, it talks about how the block subsidy reward slowly goes away. It's called the halving. It happens every few years, and slowly that subsidy goes away and it's replaced with transaction fees. So on any given day, I think this morning I looked at it in the last 24 hours, we've done well over 3 million transactions in the last 24 hours. And every one of those transactions, we earn a fraction of a penny. And that cost is very, very cheap, so that you can start thinking about things like Internet of Things and things that have massive scale. It'll be very soon that we're going to do 100 million transactions in a month. Already the month of January is our biggest transaction month ever. And every time a transaction, it's when one thing transfers from somebody or something to something else in a peer-to-peer trustless way, a tiny transaction. Get ready for when we're doing 1 billion transactions a month. And that's what we're talking about. And we do blocks now very routinely, where the fees associated with all the transactions in that block earn us more money than the block subsidy reward. And that's very true to the invention of Bitcoin.
Okay, and how are the, I guess, what is the
payment?
Yeah, what
it's paid in Bitcoin SV. So there's two types of payments. So we get paid by the blockchain itself. Every time we mine a block, that's our reward. That's what we get compensated for that. There's, in 2009, there was 21 million Bitcoin minted, and they've slowly been released via mining reward. All the rest are in circulation, and we get paid in Bitcoin SV for every one of those transactions. Tiny payments.
Okay, got it.
And so that's why something like Bitcoin SV has real intrinsic value, right? So you're actually using it for something. It's not, I'm going to put this in my wallet and have a greater fool theory and hope that somebody else dumber than me comes and buys it at some higher price. Like that's not a great business model, but we see it all the time, right? The value here is because you have something that's of extremely useful. It has an extreme amount of utility. You can do all kinds of things with it. You can do everything you can do on the internet on blockchain. We've got people making, a Bitcoin telephone, it works on blockchain now. That's a hard concept for people to get their heads around. So if you have something that's very limited supply, that's extremely useful, there's real value there.
Okay, so I don't know if you have it in this deck. I know you had it in previous decks. I wanted to see. Yeah, this is it right here.
Yeah.
So talk to me about this slide right here.
So we're in a protocol war right now for blockchain. There's all kinds of different protocols, Polkadot and Cardano and Solana and Ethereum and all these things. And they all are trying to do the same thing. They're all trying to use this ledger of truth to create different kinds of applications. So for a protocol to win, just like we talked about in the internet, where TCP/IP won, and I remember back when I had an internet company, you had, same sort of discussions. Well, you'll never displace frame relay, and there's always going to place for token ring. It's like, no, there's no room for any of that anymore. It's all TCP/IP. That's what we use every single day for absolutely everything, and we never talk about it because that discussion's over. The same in wireless with CDMA. But there was a time for a number of years where it was a big debate. And now we're in the same debate here. So for a protocol to really catch on, it's got to be super scalable, it's got to be stable, and it's got to be inexpensive. And so Bitcoin SV has the absolute lowest fees to anything. And it scales up more than anything else. And today we're doing more transactions on Bitcoin SV than all these other protocols combined.
When you say it, all these other protocols, but combined, you're saying Visa's doing 24,000 transactions. Is that a day, or what is that?
That's a second. That's a second.
Oh, that's a second.
Yeah, that might be like on Christmas Eve or something like that. But like, I'm just looking at it right now. So Bitcoin BTC in the last 24 hours has done 232,000 transactions. Ethereum's done 1.1 million, and Bitcoin SV has done almost 3.6 million.
Wow. Bitcoin SV has done almost 3.6 million
transactions the last 24 hours. And I guarantee you most of your listeners have never even heard of it. But what Bitcoin SV is, it's the original Bitcoin. That's what the invention is. And that's not my word for it. There's plenty of evidence that that's the case. This is as it was invented back in 2008 and implemented initially in 2009 and 10 before BTC changed everything.
You are in excess of 70,000 transactions per second.
We're capable of that. Like, so if you do 3.6 million divided by 24 hours, the number is going to be something closer to, I want to say 40 or 50 or something like that.
Okay. I mean, it's fascinating for me to look at this chart right here and see this one up here, and then look at
BTC's way down there at the bottom,
and then PayPal. I mean, PayPal is a pretty damn big name. I don't know.
Yeah.
And to see it down here is pretty crazy to me, right?
Yeah. But more importantly, this is all done peer-to-peer. There's no trusted third party in the middle. There is no MasterCard or Visa or PayPal or anything else in the middle. It's just,
And then this, just so I'm clear on this, average transaction fee is, for you, is 0.01 cent.
It's, if you look at it probably on a 12-month trailing basis, it's probably closer to half a penny per transaction. And Ethereum's, can be $40-50. BTC, there's BTC, which everybody loves, and it's trading at $33,000 today. It doesn't do anything, right? It doesn't. There's three things you can do with BTC, and this is why I don't own it. Is you can buy it, you can sell it, and you can hold it. It does nothing else. It does nothing else. And
okay, so
it's like, in that way, it's kind of like gold, except actually there's uses for gold. Gold can do things. You can fill your teeth with it, and you can use it in electronics, and there's things you can actually use gold for.
All right, so but the transaction fee for Bitcoin is $3
on a great day. It could be much higher than that.
Okay. I mean, I'm probably going to get a lot of hate mail and stuff on this.
Yeah,
because there's a lot of people that are just really, they're committed to Bitcoin and Ethereum. And look, I don't have that and I'm not committed to anything. The way I view the world is things change very rapidly. The winner of this very new industry has not been determined, in my opinion, yet. Right. I think
we're in the early days.
we're in the very, very early days. And I can think, I'll just go back to a company called MySpace. That was a big social media thing. I don't think they exist anymore.
How about Netscape?
Or
You know,
Netscape,
we
right?
all use Netscape, you know, and
Yeah,
then Google came along and it just worked better.
right. So,
It's
I
better.
mean, you just never know. So, I mean, I understand, you know, people have money, you know, involved, and I get it, but you know, Kodak and Blockbuster were the 800-pound gorillas that didn't see the little guy that came up and took it all away from him, right?
That's right. That's right.
So,
You know, I think the big difference this time around, you know, compared to the internet, you know, industry was dragged kicking and screaming, you know, to digitize their businesses, the banks, the big department stores, all that stuff. They didn't take it seriously and they didn't put money into it. And that's why they were so easily disrupted. I think this time around, big companies are really thinking about blockchain and really trying to figure it out. All the big consultant companies have blockchain groups now. They're working with industry. They are trying to figure this out. And you're starting to see some applications. IBM is got a huge group that's involved in blockchain. So I think this time you're going to see much more rapid adoption. You know, you're dealing with the generation that grew up in digital and grew up expecting disruptive technologies to change things, and that's what we have here. So, you know, what we're trying to do is we're trying to capture the transaction fees associated with that. And you know, even though we'll do 70 or 80 million transactions this month, it sounds like a lot. It's still, you know, that's very, very small still. But as a percentage of our revenue, you know, the transaction fees are growing over time, and everyone's focused on the price of these tokens. It's like, I don't know what a great comparison is. It's like, you know, it's focused on the tire pressure of NASCARs, and we're not looking at who's actually winning the race and going faster. You know, oh, I love Dale Earnhardt's tire pressure the best. You know, like it's not relevant.
right. So you gave me an example one time. I think it was one of the first times we spoke. You were like, Tim, think about, like, on the internet, you know, you come across an article, and like today I'll come across a headline of something that might be of interest to me. I'll pull it up, and you know, it comes back, oh, you got to subscribe, become a subscription, you know, for whatever, how much it is a year, 6 months. And then I wind up not reading the article. I just move on because I don't really want to subscribe to whatever it was for a year, right? I just want to read that damn article. And you said, you know, what if you could read that article for 5 cents, right? And that makes so much sense to me, right? It was like, I would pay the 5 cents to read the article if it was something of interest. And for that to be on the blockchain, all these little I mean, think about how many micro transactions there would be of people that are paying 5 cents to read an article. That's a lot of, but it's all, and to have it be on the blockchain, that's a huge infrastructure that you need in place, and a company that can keep up with that kind of demand, right? And but I thought it was a really good example of, just one example of microtransactions that could take place, right?
100%. That's happening today. That's happening right now. In fact, there's a company that we're involved with that is paying microtransactions for people that do online reviews. So I like this restaurant, you know, you're a verified user. We know that you're a real person, and you know what, you do a review of this product or this thing or this article, we'll pay you 5 cents. There's a Twitter alternative called Twetch, and you pay to follow people a couple pennies. This only works.
What is it called?
Twetch.
Twetch. TWETCH.
That's right.
Okay.
That's right. And you pay to follow people, and you know, you want to follow somebody, you pay them a couple of pennies. But that only works if the transaction fees half a cent or 0.4 of a cent
aren't killing you, right? I mean, if it's $3 to pay 5 cents, you got a problem, right?
Right. Like think about, there's a multi-billion-dollar industry called remittances. And, you and I might not be familiar with it, but there's a massive economy in the world where people come, they work in Canada, the United States, or in Great Britain, and they send money home. And right now, the only way to do that is with Western Union and all these kind of things. And they take 20%, 20%.
Of your
What if you
money.
just had a wallet and it cost you half a penny to send your $100 back home? That's a massive industry that's getting disrupted. It'll be disrupted through crypto. And with BTC, there's kind of like a libertarian kind of undercurrent to it. People like the idea of a non-centralized currency and all those things, but start thinking about well beyond just the token, guys. Like, start thinking about, you don't really need a credit card company. You don't need a bank. You don't need these things that are making massive fees. You don't need the New York Times, charging, I just bought one yesterday. It was $10 for my issue. I wanted to read like 4 things in it. I would have happily paid 25 cents for each one of those articles and just read them at one time. Or, why can't I just follow the writer that I like, and I'll just read his or her stuff and pay them directly without any intermediary in between. Like, if people that love the freedom aspects of crypto, it's happening right now. And these applications, I think our last count was we had 800 different application developers on Bitcoin SV. Now, that doesn't sound like a lot, but it's a lot more than it was a couple of years ago. And a couple of years from now, it's going to be thousands. And they're going to be solving problems and putting applications on the blockchain, and we're going to use them without understanding the underlying technology, just like we do today with the internet. And we'll just like it. We like the idea of micropayments. We already know that for a fact. We like the idea of being able to pay to use something without, to your point of subscribing to it. Another example of an amazing company that is using it is, think about your healthcare records. If anybody's had the misfortune of being involved in the healthcare system, like we just were with a family member now, the doctor is faxing the prescription to the pharmacy, a fax machine. This is like a third world country. And but your patient records, your data should be in one place. And people have been trying to solve this problem for 25 years of digitization of medical records, and they haven't been able to get it done. But the person that should own that digital copy is you in your wallet. So, right now you have a medical record at the pain clinic, at the chiropractor, at the pharmacy, at the doctor's office, at the emergency ward. There are all these different copies of stuff that should belong to you. And it should be cryptographically secure in your own wallet, and that you want to give permission. The blood clinic wants to access your records. Yes, you just do it on your phone. Yes, go ahead. And that record lives there, and that provides, if you have accurate data that's all together in one place, it's better patient outcomes.
Right.
It's a fact. And companies are solving for that right now.
So, I actually I brought this up the other day because there is, it's frustrating to me when I come across companies that I see clearly the solutions and how it could make our economies more efficient, and we could save a lot of money, and by being more efficient, we could give the consumer a better experience. And I do see that these solutions are out there, but it's aggravating to me because I'm sitting here thinking, why aren't we on this like right now, right? Why isn't and the reality is, I think, if you were to look at the haves and the have-nots, there's a lot of money to be made by being inefficient.
Yeah.
Right? I mean, there's a ton. It all comes down to money in my head, is that, somebody out there is like, yeah, this makes a lot of sense, but boy, we make a shitload of money the way it is. Right?
Yeah. Friction. Yeah. There's a lot of people getting paid that want to keep getting paid. And, but we've seen it in so many industries, the kind of the Uberization of so many things, because we like the convenience, and there's still fees being paid, but we can slowly disintermediate a lot of those things that cost money, cost time, and create inconvenience. And the people that are there are going to go kicking and screaming. And in the case of like the credit card companies and things like that, these are very powerful organizations, and we got a lot at stake here. We got a lot at stake.
Right. There, I mean, when you're starting, when you're bringing up these names, I'm thinking these guys are connected, man. These guys are connected to, you know what I mean? At the highest levels of probably our government. I mean, and instead
Tim, like this whole debate now for some of your more crypto savvy folks, like between proof of work and proof of stake. Proof of work is trustless and peer-to-peer. Proof of stake means we're going to pay some third party to settle our transactions. That's what it means, Okay. And when you hear the visceral, well, it takes all this energy and all this stuff. Bitcoin SV uses 0.5 of 1% compared to BTC, and you can do all this stuff. People are using more energy to take pictures of their food and put it on Instagram than the crypto market's using. Okay. It's another irrelevant metric.
Right. All right. Well, I think we've had a pretty damn good discussion about what this is all about. Let's talk about what you're specifically doing now. I know you guys you just had a news announcement the other day. I think you're mining in the States. Is that
we bought a what will be a data center in New Brunswick, Canada, and we did that right before Christmas. So we're designing and building that, as we speak, but there's 50 megawatts of power there. That'll be a cornerstone location for us. Because again, we talk about all these applications, and those applications still rely on mining blocks. So we're going to continue to mine blocks, well beyond after when the block subsidy reward goes away. That slide that you have up is some amazing examples of clients that we have and companies that are building on the blockchain today. FYX is an amazing company doing metaverse kind of gaming. Another phrase that maybe people haven't heard is called play to earn. And these games where you can actually earn, whether it's crypto or money in these games, that's becoming a real theme. I see you've got a friend there. And Tokenize down in the bottom. Tokenize is a fabulous company doing the tokenization of securities and other types of smart contracts in a very, very compliant way. So a lot of the stuff, the building blocks are kind of boring. You have to, make sure that you're compliant. You have to really work with regulators. You have to do all that kind of stuff. But all that adds up to revenue for TAAL down the road. We guided in our Q4 that we'd exit around 14 million or so for the quarter. So you can call that like an annualized run rate of getting close to $60 million. People ask how much money we're burning. We're not. We made money in Q3. We made money in Q4. We raised $40 million last year, and at the end of the year, we told the market we still had $35 million of paid deposits, and those deposits were for infrastructure, for computers, and for power. So it's still on the balance sheet. And we're a small liquid company. We're going to keep working to change that, but we've got, we're well over 50% insider held, and then we've got some big shareholders outside that. So the float is very, very small, and that can frustrate investors. I understand that completely, but I'd rather have less shares out and be tight than have 1 billion shares out and it trading like waves on the ocean. I'd like a tight share structure. We've only got $10 million in debt. That's very friendly debt from a family office. So from a capitalization structure, we're in tremendously good shape.
So right. So let's talk about that for a second. I mean, you're right now. Matter of fact, I didn't do that at the very beginning, but I'm going to do it right now. The symbol for the stock is TAALF, and it's traded on the OTC exchange. But I'm going to venture to say that maybe you might be interested in uplisting to a senior exchange at some point.
Yeah, absolutely. That's one of our goals, and we got to get through a few things to get there. And I think for technology companies, there's only one exchange in the world that matters. That's NASDAQ, and that's what we aspire to do. But a mistake that sometimes companies make is you can only debut on NASDAQ once, and we want to do it from a position of strength. And there's some other things I'd like to accomplish before we do that. So we have not applied or anything like that yet. So this is going to take some time, but that's where we're eventually going to end up.
Okay, so you just said something that is absolutely music to my ears, because and it's something that actually I say quite often, is that you have one shot when you're uplisting to the NASDAQ. So just to uplist is not always the greatest idea, right? I mean, if you're going to uplist, I would think that you want all cylinders firing, right? You want everything in alignment. You want the hockey, the revenues are hockey sticking, right? You want to be profitable, so that it's not just you get uplisted to the NASDAQ and then for the next 2 years you're battling trying to stay above a minimum price bid of $1, right? Or whatever. Why even bother? I mean, that's just going to create a headache. And if you wind up going back down, coming back up a second time is going to be a hell of a hard path, right?
Yeah.
So it's comforting to hear somebody say that on their own, right? That is a very positive thing. It's like you have a plan, you have the vision of how you want to get there, and you're not going to make the move until you feel as though you're there, right?
Yeah. So at the end of the day, this transaction business creates what the market likes, which is very predictable recurring revenues spread out over hundreds of clients, and that predictability and diversification should trade at a good multiple. And what I want to be at a point where it's like we're already there, it's already happening. It's not something we're talking about or aspiring to do. And TAAL will be as successful as all of these companies, these wonderful companies that we try to support, will only be as successful as they are. And these things take time.
Right. I want to back up for, hold on a second. My dog does not like it when I'm having meetings without her. That is the sound that you hear in the background here, and she just will not leave me alone. She's a very stubborn dog. But let me pull that back up here. I wanted to go back. All right. This gentleman up here that I didn't get the opportunity. Who is this gentleman right here?
So Stefan is our executive chairman. He was CEO last year. Now we have a new CEO named Richard Baker. He's based out of Cambridge. But Stefan has been around, the crypto market for a long, long time. He is a very involved executive chairman, and I'd say one of the most knowledgeable guys about the history of Bitcoin in the world.
Got it. I actually, I watched a video with him in it. He's a very, very interesting gentleman. I just wanted to bring that up. Yeah. So shares outstanding, fully diluted, Chris, what are we talking about?
We're talking about 38 million shares.
Okay, 38 million shares.
I know, it's in a shoebox. It's in a shoebox right now. So, companies like us, the public miners, they trade at kind of 4 or 5 times next year's revenue. We would welcome that as a multiple. So, even though despite what's happening right now, it feels like we're entering a crypto winter, and there's going to be a big shakeout here. That's what it feels like today. But these things have a way of whipsawing around. But I think at the end of the day, so many of these tokens and everything else that have no real actual value, they have no utility. They're going to get wiped out, and that's going to hurt kind of everybody for a while. And it was the same thing back in 2000, if you remember. Like everything was .com, and but there were some amazing companies in the mix, and those amazing companies emerged a year later, and have been dominating the headlines for the last 21 years.
Yeah, so you bring up a really good point. The .com period, I lived through that, right? I mean, it was as a matter of fact, it was one of the worst experiences of my life. But and it was a good learning experience, because at the time I had gotten involved in the stock market really kind of by accident, but there were companies that I liked that I fully believed in. And then what had happened was I was with Solomon Smith Barney, and this is back in the day when if I wanted information on a company, I had to have it mailed to me, right?
Yeah.
If I wanted to place a trade, I had to call my broker and he would do it for me, and it would cost me like 300 or 700 bucks, right?
Yeah.
On the buy, and then it would cost me that on the sell. So very different times, but he had me in all of these .com companies, and I actually called them and said, listen, I don't know who these companies are, but the two companies that I picked, I want to sell all the .com shit. Now I'm in my 20s, and I thought I was a baller because I had like 150K plan, right? I thought I was a big time baller. And I said, I want to sell it all and I want to put it in this one stock that I have. And he told me, he sat on the phone with me for 45 minutes saying, worst mistake. He talked me out of it. 2 weeks later, the .com bubble burst. And I mean, shit was just straight down.
Yeah.
And I couldn't get a hold of this guy because guess what? I found out I wasn't a baller.
Yeah.
I was an itty bitty minnow, right? Because there's these huge whales that had millions with them, right? So my account, if I would have done what I wanted to do, I would have been very wealthy. Because that one stock that I had, yeah, that one kept going. A lot of the .coms, they just disappeared, right? And so if you think back to that experience and you look at where we are now, like I said, I don't think crypto or NFTs or any of that stuff is going away. I don't think we've completely defined how all of these things will be used yet. But I think there is going to be significant use of all of this stuff. It's just a matter of who's going to be the one that comes out, who's going to be the Amazon.com, who's going to be, right? Because there were .com companies back then that were good, and they're still around today.
Because they were companies. They were real companies.
Right.
A lot of it was, they were just stocks. And that's the exact analogy I use today. It's like a lot of these tokens are just tokens. There's no underlying utility or value, and that's why, Jeff Bezos at the time in 2000s, like the stock is not the company and the company's not the stock. And, I always think about that. And, for me, not only do I have the privilege of being able to see what's happening inside, but anybody watching right now, you can go on, what's on chain, which is our block explorer, and you can see the transactions in real time, and you can see them on a daily basis and on a monthly basis, and you can see it as, wow, I might not understand what's happening here, but there's a lot of transactions going on here. Somebody's doing all this and using it, and it's hard, it's difficult, it's complicated. I remember I got my first internet account from AOL. You had to call them on the telephone, then they mailed you a disc. Then you had to install that on your computer. Then you had to call them back and get a code. Like it was very complicated. It was very complicated, and we're still in that stage here with blockchain. It's complicated. It's clunky. It's not perfect, but these things have a way of working themselves out.
All right, so let me ask you a question. What could be the thing that goes wrong? What's the thing that keeps Chris up at night?
These companies need to be properly capitalized, and that's what we've done. We're not waiting and hoping that we hit some sort of milestone and the investment window will open. So, I don't worry about that part of the business because I think we're building something of real value here, and that value is readily apparent. Will this take 2 years or will it take 6? I don't have the answer to that, but it's going to work. It does work. Like it's working right now, this second. So, it just takes a lot of education and a lot of evangelizing this new technology so that people understand it. And, like anything, people have their own ideas, and a whole bunch of people are wrong. And, but the underlying technology works, and it scales, and it's cheap, and I think it'll be very, very successful. So TAAL is the pure play on that.
So the one thing that I do get concerned about, and we talked about, or you talked about the efficiency of having all of this stuff in one wallet, right? But what scares me a little bit, because I talked to this quantum computer guy, right? He's a cyber security guy, and he's like, I asked him, I said, what about crypto? If quantum computers, crypto is that safe? He said, was his response: the blockchain is very safe. He said, but anywhere that the crypto is stored or sits, I guess is what he said, or your data, for example, where it's sitting, that's in jeopardy, right? And that made a lot of sense to me. So in other words, a wallet, right? Now you can have a cold wallet, right? Which I didn't know what a cold wallet was.
Yeah.
Right. But you have a cold wallet, which is essentially, a what do you call it? Flash drive or whatever that is not attached to the internet at all. Right. So when you're talking about the wallet, are you, would it have to be to be 100% secure? It'd have to be like a cold wallet, right?
Yeah, I think listen, everything that's happened bad in crypto has been on some sort of third party, a custodian, an exchange, or, not the blockchain itself. So, and I would never try to debate a quantum physicist or anything like that, because I'm not technical. But more and more, I'm convinced that as we all use these things, it gets better and better. And it's just like when we were transacting on the internet in the early days. It was kind of freaky, you plugging in your credit card and using it. And we came up with systems like PayPal and other things that overcame those security concerns. And I think when the size of the prize is so big, we'll figure it out. And we do all of our online banking. We don't really think about that anymore. I type in my password and I do all my banking online. I don't worry about it. I haven't heard about a lot of big time problems. So I just think they'll figure that stuff out. And you guys also have to remember that in crypto is like a Klondike industry. Some of these things were set up to fail. They were built that way, so that, you can go and make a heist at some point in the future. So
that's an interesting thought.
Not all of it, but some of it.
No. I hear you. I look at what just happened with the squid token. Are you familiar with the squid token thing?
I only the headline. I don't know anything about it.
I didn't delve into it very deep. I didn't even know what the hell it was. I just know that it went to $2,600 a token off of some association to some show that's on Netflix, right? And then that turned out to be a scam, and that token's worth nothing. And I'm not laughing at the people that bought that token. I feel bad for those people, but you need to know what you're buying before you buy it, just because it's associated or supposedly associated to some show that you happen to like.
Yeah. Well, there's a bigger one out there that everyone kind of knows as a scam and nobody cares. It's called Tether. Every one of those tethers is supposed to be backed by a US dollar. And, if you believe that, you've got some other stuff to sell you, and we're talking about big money. It's big money. Right. I don't know what the market cap of Tether is right now, but I'm sure it's 60, 70, $80 billion, something like that. And where are those dollars? They're not sitting somewhere in the bank. They're not there. They're somewhere else.
Wow. That's a little scary. I'm not familiar with Tether, so I can't even, I have no input on it whatsoever.
Yeah.
That's scary if what you're saying is
well, accurate. I think the Department of Justice is already on it, and there's probably going to be some some more news at some point in the future. But I think people in the industry broadly understand that there's still some major problems, and that is true in all Klondike industries. In oil and gas and mining and the internet, certainly in the early days. When things are unregulated and loosey-goosey and brand new and complicated, there's always ways for guys to figure out scams and other things. And crypto is no different. There are many scams out there. There's good reason to be concerned, but that doesn't mean the whole thing's broken. That's just kind of life.
Yeah, you just kind of nailed it. You're absolutely right. You're absolutely right. So there's a lesson that I learned very recently about, there was a private placement I was trying to get my members involved in, and some of my members are, teachers, and they would never have the opportunity to participate in a private placement. I thought I was going to be able to bring them into this thing, and man, after going through the whole rigmarole, you wound up having to be an accredited investor and make $200,000 for the last 2 years, and you got to have over $1 million, not minus your home, and the whole thing was and all of that is supposed to be so that they can protect the little guy, which is just a bunch of horse shit, right? Because that doesn't make any sense to me at all. If I want to sell everything I own tomorrow and go buy the stock in the open market, nobody is going to stop me from doing that, right?
That's right.
So I'm putting everything I own on the line. How am I protected? Where I could have participated. Now, if I'm trying to buy it in the open market and it's a thinly traded stock, every time I put in an order, it's probably going to jump. So I'm going to have to chase it to get a fill. Whereas if I could have done the private placement, I could have bought as many shares as I want at a guaranteed price and got some warrants.
Yeah.
Wow. Yeah, that's protecting me though, right? So what happens is I looked at crypto and thought, that's why crypto is so powerfully strong, because anybody can buy crypto. So the not being regulated part actually is what makes crypto so attractive, because you don't have to have 200 million, 200,000 a year income for the last 2 years. Does that make sense to you at all?
Yeah, but I would say that Bitcoin was never meant to be outside the regulator's overview. It was designed specifically to be regulated, and that's in the original design.
But I guess where I was going with that,
I guess what you're saying is like there's a difference between being a regulated thing and being open enough that anybody can participate, and it should be open up that anyone can participate if they choose to as grown adults.
Exactly. That's what I'm saying. But by not being regulated, because any token or anybody can create a token, and there's some nefarious people out there that don't have any good intent other than to create something that they can scam people with, right? Yeah. And that's the problem, is that people are buying things that they don't fully understand, and they're going to get burned at some point. They're going to get burned back, right? And yeah. that's the problem with not the regulation part, right? So you have to have that balance, regulated, but you know what? Fair and open market. If you have $200 and you want to buy whatever it is, some kind of token or crypto, you should be able to do that, right? But hopefully you do your homework and you realize what it is you're actually buying. I guess that was my point.
Yeah. And I wholeheartedly believe in the tokenization of real world things, and that to further democratize investing. Like, for instance, these AAA office buildings in the best cities in North America, that is not something that the average investor can get exposure to. But if you were to tokenize Brookfield Place or Scotia Plaza or one of these types of places, and anybody, I can't afford $20 million worth, but I can buy $200 worth of this incredible asset, knowing that there's only 1 million tokens, there's never going to be any more, and I can get exposure to those kinds of investments. I think that's really, really interesting. I think there's lots and lots of things
that is a very interesting example right there. I mean, that makes a lot of sense to me. right?
Yeah, Brookfield Place doesn't need to involve any brokers or anybody else. They can just do that directly with you. And you're starting to see that in other industries, like in music, for instance, and in art, where you can have a one-on-one relationship with that creator, and nobody else has to take a fee involved in that. And the people are catching on to that.
Yeah, no, this is really interesting conversation. All right, let me just close. I know I've taken up a lot of your time here. Next 6 to 12, what is it that you see as potential catalysts for the company?
Yeah, I think keep our eyes on transactions and the breadth of applications coming online. As more and more applications come online and are using the blockchain and deriving utility from it, those are all the indications that we need. On monetizing all that stuff, we'll come out with the right programs and the right cost structures and all that stuff. We'll figure all that stuff out to make sure that it's accessible and scalable and easy. But more and more applications, whether it's this year or next year, but someday we're going to talk about some application out there that's using this blockchain, and you have no idea. It's an application that you really love. It's a game that you're playing. It's something that you're doing. It's something that you're really enjoying or finding tremendous utility from it. And it just happens to be on the blockchain. That's where we got to get to when this stuff really starts to sing.
Okay. All right, Chris. Investor relations, you guys have an email alert service on your site for?
Yeah, come to the investor site at TAAL.com. Just sign up. We put out a newsletter pretty much every week. We try to be as transparent as possible. We do webcasts. We communicate with shareholders, and we answer every single email.
And you've got, I think, Robert Briza over at Lithium is your IR, right? The IR contact.
Yeah, they are really helpful. Those guys. We're covered by a couple analysts now as well. So we'll just continue to work on all that stuff. But our main corporate development is Matt Whitcomb is there, and Matt and his team will respond to all inquiries.
Okay, so listen, I just want to talk about the chart real quickly, and then we'll wrap it up. But listen, for the entire micro cap, small cap market right now has been under assault for 8 months.
Yeah.
Right? I mean, for 8 months, it's just been taking it on the chin. So, when I look at your stock, yes, it is down, but it is not down nearly as much as a lot of stocks out there, right? And it's not company specific, it's sector. That's just the way it is. And look, can it get worse? Sure. At some point, though, I think some of these names are getting to areas where I do own TAALF, by the way. I want to make sure everybody's clear on that. I am not telling anybody to buy TAALF. I'm not a financial advisor. That's not my thing, but I am telling you to put these guys on your radar and start following the story and maybe do your own due diligence. So right now we are technically coming up to an area of potential support right around $2. If 2 cracks, then maybe it goes down and it tests 160, 150 area. My belief is that your risk reward on a stock like this that has this many things going on, this many transactions happening per second, probably is something to. I think the risk reward far outweighs some of the risk reward you're going to see in names like Microsoft and Apple right now. I'm sorry. Somebody, I'll probably get hate mail for that too. And that's okay. But I think this is a very, very compelling story. I think in this area, to start maybe dipping your toe, I don't think this would be a bad place to do it. So I don't know what you think, Chris. But
well, I think that I'm deeply invested, and I don't have an exit strategy, and I'm putting all my time and effort into this, and like I say, it's my 4th time around, and this is I think there's tremendous value to be created here, and that's why we're here. And it's on days like this where it's hard to talk about microcap stocks when Nasdaq is off 15% year to date, and these are tough times, and I don't know where the bottoms are on these things either. But we don't trade in a bubble, like, or in a vacuum. Like, we're part of a market. We made the decision to be part of the public markets. And here we are, and it stays like this where, man, being a private company would be really nice.
Well, the thing is, it's not just you, right? I mean, and I guess that's what I try to drive home with everybody is, look, this is not a company specific issue. This is an overall market issue. And, I'm going to say it again, Warren Buffett, who is one of the smartest investors in the history of the planet, says, be greedy when others are fearful and fearful when others are greedy. I mean, I don't know how else to say it, man. I know human nature, sometimes it takes over, but you've got to, this is the time when you're looking at companies and you should be thinking about adding or starting a position, not selling. That's just my point of view. So,
amen.
All right, Chris. Hey, thank you so much. Hold on one second. I'm gonna. Thanks for tuning in. I hope you enjoyed today's interview with Alpha Wolf Trading. Another CEO, this time Chris Naprawa from TAAL, ticker symbol TAALF, traded on the OTC exchange. If you liked today's video, do us a favor, give us a share. How about a like? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.